What is up, guys? It's CJ here, and welcome back to another Wyckoff case study. This being on a stock called SpaceX. This was I think it was the biggest IPO in history. So lots of institutional involvement in this chart. I know there's lots of things going on with, allocation and people being able to buy in early, all that stuff. Not going to cover any of that in this video, and we are just going to look at the technicals because we have a SW2 distribution, a Solari Wyckoff 2 distribution at all-time high. It is super nice. So we're going to break it down. I've been waiting. I wasn't going to take the first trade that I saw on SpaceX. I just wanted to see, how it's trading because it will be extremely tradable with crypto exchanges as well. I think it's listed on pretty much every crypto exchange, or it's listed on a lot. So we're going to get rid of this TA and we are going to put it back. And we are going to start right here. So basically, SpaceX IPO'd right here. We're on the NASDAQ chart. IPO'd, and then it has been trending up, created some structure demand, and then it went into this range. So we're trending up. We can pull our range from high to low. Just like that. So we don't have a great return to zone. Let's check our volume. After hours volume, absolutely none right there. Hard to do that when, so you can't do this intra volume trick when your asset is way more heavily traded within New York, within the New York session. So if it's intra New York, all good. But when an asset is heavily traded during New York, different story. So New York is heavily trading this. So the volume will just be insanely high during New York. So what we can see here is that we had a range deviation. If we want to check our DL tool, our deviation limit tool, we can see that we never close a candle above that deviation limit. So super nice price action. Coming back down, let's stay on this time frame for a second, and let's pull some third tap POIs for potential LPSYs, which is the third tap of a Wyckoff Model 2 distribution. So you get this supply POI, which is this 10-minute order block. Come back down to the lower time frame. Now, what can we see? Now that we've come back into the range, let's build our model. You have a 5-minute inverse for value gap right here. Just to go underneath our supply in case. Oh my. Oh my. There we go. So super small 5-minute. We're going to check for others. But gotta have those POIs on just in case. That's what you get the reactions. Okay, this is a much better area right here. So you get that 10-minute IFVG right there. Perfect. And we can start to build our Wyckoff model now. So we don't have that super nice return to zone yet, but we have a range deviation. So we have a range starting point for a buying climax, and then we have a UTB. We have an AR right here, which was a 2-tap SW2 accumulation right here. Perfect. Now we're building our model. Buying climax. Did slightly break structure. It's hard to say. This was a really weird wick and opening stock things, but this is trading super clean. It's trading super clean. So let's watch price now. So probably set an alert. We've already used this IFEG though. So we already used it. We can keep it on there, see what happens. Use it, get a slight reaction, and then push up into that supply. So I'm going to get rid of that. I am putting those on a lot now just in case for different things, but it wasn't really that significant. Now you may be asking yourself, CJ, did that UTB confirm? And the answer is yes on the 1 minutes. I mean, that IFEG confirms it as well. But we like to double up. So you do get that market structure confirmation right there on the UTB. So now let's take a look at our range. So we've come into this supply on here. Looks like you had a little bit of supply right here and a little bit of supply right here. I wasn't really checking the 2 minutes, but you had nice supply areas. So very nice, nice Bojan high there. I'm sure someone traded this IFEG right here. Wow, that's pretty clean right there. That's a clean IFEG right there on the 1 minutes. Harder to trade though, but when you see that Bojan high, just put it back real quick. Don't want to get too sidetracked, but it's just interesting to see it, you know. So you had that. It wasn't an IFEG at the time, nor was that supply there. You closed that candle right there. And then I'm sure someone went like this. Stop loss above Bojan high. Even just, you know, run it for these internal lows. Something like this probably for a 2R. Tagged into the trade. Full TP. So you could have extended for these liquidity targets. I just wasn't sure where it went. Yeah, it's pretty nice. We got a little sidetracked in the video. Just wanted to show someone definitely traded that. So super nice. Continue on price. You have a better idea now. So that price action basically created all of this. What was the point of me doing that? Just to get a feel of the chart, just to feel it, you know? But now we're coming into supply. I like this 2 minute, honestly, and we can see that we're forming another range right here. I'm gonna put no EQ on this side. You can see that we have a PSY, that sweep liquidity, potential PSY, right? It's always potential, potential buying climax right there. That broke structure right here. That's that first breaker structure, just on a level 2, just to see some sellers stepping in, obviously. But return to zone is building super nice. So let's get down to the 1 minutes and find any market structure. Swept that liquidity point? Yeah. So I'm not sure if we come into that supply, but you definitely swept liquidity. Look at this return to zone. Look at this return to zone. Let's zoom out on our model. So if we're seeing this, we're thinking, okay, we might be having a trade here. Let's be pulling our volume profile. Oh, what do you know? We're at that value area high, coming into an LVN pocket right here. Sweeping liquidity. So sweeping liquidity, LVN pocket, value area high. This looks like an interesting spot for a trade. Move that range high up for that local guy. This is looking like a very, very interesting trade. So if I was looking at this, return to zone, looking crazy. Just want to be following the market structure. Literally just following the market structure from this point. Right, so it's just going like this. Takes that high. This is that market structure low. So here's our market structure. Get that low on the chart right there. We're trying to break it now. So be doing analysis like this just in the moment, right? And there you break it. Back to bearish. So this breaker structure is a Wyckoff model, but let's not even look at the Wyckoff model, right? Swept liquidity coming into an LVN pocket, low volume node, that's a volume term. And you are getting a breaker structure that should rotate you down to this low, right? This breaker structure right here should rotate us down to this low. If we come down, if price comes down to that low, what is there to stop it from coming to the AR low? Well, really nothing, you know? Like, not to mention that we are in a potential Wyckoff model getting an LPSY, where this is that Wyckoff target. Guess what? It's also, it's not, it's after hours. but it's the same. Technically, London runs right into New York. It's definitely a target. Either way, I thought it was going to be London there. It is technically London, though. So London does run right into New York. But we get that breaker structure. That confirms the entry right there. You can get this range off. Confirms the entry right there. We got an LPSY on minor structure, you'd be saying in the moment. That candle closed. Take that. Stop loss above this high. Run that down for a 5.75. So if you would have taken this trade, let's extend this return to zone now all the way to this AR because it's essentially what we have. And then this would be the model that you're in. So if you're putting, execution at the start in your journal, this is what it would look like. And you'd be saying, I traded a minor structured LPSY right here for the third tap of an SW2 distribution, Solari Wyckoff 2 distribution. And this would be your before shot right here, targeting that AR and then potentially targeting, with some lower targets down here because, we got this liquidity point right here as well for extended targets. But obviously the technical target of our SW2 is this low. So if we play out price, come back up, almost get a touch of that value area high. And right there, you hit that technical target. So super nice trade here on SpaceX. I wasn't sure how I was going to trade. I was going to let the first Wyckoff play out, and then I was going to see what I thought of it. But super nice play right here. Really enjoyed it. That candle closes right there. Maybe it's a 5.5. I'm not sure. Either way, that was the entry. And let's see what happens next, though. Right? Let's see what happens next. So do we have any range reversal POIs? Let's go in the higher time frame. Let's see if we can find one. So we have this range supply right here, but the POC is backing something in here. It's not necessarily backing this. So we can be having this supply right here. Really like the look of this for some reason. Really like the look of this range. Let's continue to play out price. So let's say we fully got out there, but obviously, so we just take that, technical target low right there. By coming back into value, maybe getting another little distribution right here. It's not super clear though. Right there, coming into that supply. Coming into that supply right there. Might be having a range deviation here as well. Fair value gap to be watching right here. Coming into that range supply. No V shape. Don't like it. Don't like it. Just ranging now. Oh man. Looks like that was another little model. Wow, never hit the technical target there, so potentially it wasn't. That's funny. Yeah, because I didn't like any entry confirmations right there. Whoa. Hold on there. Now we're getting another range deviation here. So we can pull our range from high to low because we're in this local uptrend. Get this out of the way. Perfect. So we can see we're at that POC here. Let's see. Let's see what happened. Was there anything more refined in here? I mean, looks like you went for this liquidity sweep, but you didn't quite hit that order block. Doesn't look to be an order block. Oh, there we go. So we didn't have an order block on the chart right there. Right there. Perfect. Little pocket right there, nothing crazy. This was just, I just like this trade. I'm not sure about this range. Let's see what happens though. So you got this market structure low. Is that candle closed? No, it wasn't. Highest time frame you had coming into that extreme supply basically of this range. I don't think there's too much here. This was, so we never put our LPSYs on, but this was the LPSY 2. Right? I really like when the models, they tend to have like 2 LPSYs, it seems like, or sorry, 3. 3 LPSYs. Sometimes you get a model 1 that has a test and then 2 LPSYs, test, 3 LPSYs. Lots of times model 2s will have, they will have 3 LPSYs, one being even like the main tap that you can be trading. So you basically came into the extreme supply of that LPSY 2, and then you had a 1-minute inversion. I don't know if I would have taken it, but it meets all the criteria to take it. So maybe we can just look at price right here. So we have a range deviation. We have a sweep of liquidity right here. So we could also trying to be a lot better with liquidity. So you have a sweep of liquidity right here. Sometimes I don't put it on. I see it, but I don't put it on. And then you're coming into that extreme supply. So valid to be looking at this IFEG to confirm a range rotation. Don't really have any demand in the range, looks like. Let's see about this market structure break, and let's see about a trade like this. Oh man, let's go 50% of the wick. Running that down as a BU LPSY though, so probably all the way to this liquidity target, because these can be some of the craziest plays, these BU LPSYs. So if you see my previous videos, especially some of the NASDAQ videos, we're talking a lot about BU LPSYs. So we come back and just like see our model here. So once you complete a model and you pull back into that extreme, these supply POIs, you can be having a BU LPSY if price wants to continue the trend, which now the trend can be switched to bearish. Not that we had any like crazy main market structure breaks back to bearish, but definitely just market makers getting involved here with this model. So let's see if we could have got in on this trade. So you're a 1-minute IFEG right there, and we're also watching this break structure. So next candle is closing underneath. That wick is tough though. Let's check if that's 2-minute market structure. Yeah, it was a wick on the 2-minute as well. So pretty tough to get in there. Didn't quite retest that IFEG, so would have potentially been like this. Looks like it didn't quite get it. There was no other fair value gaps, so we'll see about another candle. Oh my, just got front run. If you wanted that, so you needed to take the candle closure. Confirming that 1-minute. Needed to take that candle closures. Maybe I should make my fair value gaps different color. I'm not sure. And the middle is getting taken out, but this is the IFEG right here. This fair value gap, right? I don't want to just watch the horizontal line right here, right? So that candle close right there, you just need to take that right there, 50% of the wick, and run that down. BU LPSYs especially can definitely be these 2-tap SW2 distribution models. Wow, and this just sends price down. for that liquidity. So a couple different trades that you could have taken there. This is a Wyckoff case study. So just definitely checking them out. Not looking to trade it, just studying how the price is moving on this on SpaceX to see about future trades. So couple trades that you could have taken there. They were pretty technical. They were pretty technical for sure. It was tough with market structure because of that one wick. You just needed to take that IFEG after mitigating this super nice POI, or you take the rejection block entry. Coming into that, which is basically just a wick into a POI that sweeps liquidity. It's pretty simple with the rejection blocks. Basically just a pretty big wick that sweeps liquidity coming into a POI. I believe you need super good context building to use them effectively, but we definitely see a case of a rejection block right here being used for a 2-tap SW2 model, just like this, for a BU LPSY to then go and sweep an extended target that we were looking at from this distribution. Just needs to get a BU LPSY right there. So, all right, guys, that will conclude our Wyckoff case study on SpaceX. Looking forward to trading this pair in the future, and I think we'll be hitting some trades on this in the near future. So, all right, guys, I've been CJ, and I'll see you in the next one.